You're listening to the Creative Capital Podcast. You're dying to learn about how you can create wealth through real estate investing? Then you come to the right place. Join in every week as we go over the ins and outs of real estate investing and learn how you too can become financially free.
You know, that Warren Buffett quote or whatever it is, the best investment is always going to be in yourself, right? I think they use that quote when they're trying to sell you the mentorship too, but right. You know, it's true. You know, you're never going to regret spending money on your own education. So
what's going on, everybody? This is Josh Ferrari, host of the Creative Capital Podcast. And man, I'm excited to bring you today's episode for many different reasons, primarily because we talk about my absolute favorite kind of real estate investing, and that's multifamily. But also we talk about a few other niches, and we talk specifically about the whole concept, idea, the deep dive into mentorships and coaching and what that entails and what it looks like and how much he actually spent on the mentorship that he used and what he was able to get out of going through a mentorship like that. A lot of people look at these mentorships, they see how much money they cost, and they think, absolutely no way, I'm not doing that. But if you really dive deeper into it, there is a significant acceleration in your journey you're able to take through going through something like that, because you're then able to learn all of the mistakes. And not only that, you're also able to learn all of the right things to do. And they typically give you all the tools and resources that they've used to do all of the right things and get you to where you need to be. So it drastically decreases the time that you actually need to spend in the business in order to be successful. Like for myself, I never actually did a mentorship program. And it took me a little over 2, maybe 3 years before we closed our first deal after deciding multifamily syndication was what I wanted to get into. And it was because I thought that, well, actually, the main reason was because I didn't really have the money. So I had to find other creative strategies. But if I had the money, honestly, I probably would have gone ahead and spent it because I would have been able to accelerate that timeline. So if you're sitting out there today, if you're listening to this podcast because you're curious about the concept of a mentorship program or a coaching program or some kind of a mastermind, and you think, I just don't know if I want to spend the money. I just don't know if it's going to be worth it for me. I think that I want to take the long route, or I think I want to do this. I implore you to dive a little deeper. Yes, mentorships aren't necessarily for everyone, but I encourage you to do a little bit more research on the mentorship that might be interesting to you. If you're listening to the show now and you like the way that I actually teach, you like the things that we discuss, you like the things we talk about, the topics of conversation, believe it or not, I am actually excited. And you already know now, if you've listened to the last episode that released, to basically reiterate the fact that I am launching my own coaching program, my own mastermind mentorship. It's kind of a little bit of the three because it's going to be a group coaching program for those out there that are looking to go from single family to multifamily or from nothing to multifamily. Anyone looking specifically to invest in multifamily syndication, what that looks like all the way from A to Z. We'll have weekly group calls, coaching calls. We'll have weekly mastermind calls. And then if you really want to know more about it, you can go listen to the last episode that was released, or you can go to our website, or you can do both. Go to our website at ferraricapital.com, click on the coaching program tab, and you can get more information about what exactly that looks like. So I don't want to hog the mic here. Michael Wagman, who we bring on today, absolutely is crushing it in what he's doing. I mean, in less than 12 months, the guy has $50 million in assets under management, primarily because he's investing in some of these larger markets. So the deals are a little bit bigger, the price per door is a little bit higher, and so your assets under management can scale a little bit more drastically from that regard. But all the things we talk about today are things that probably have gone through your mind at some point when you're thinking about getting into real estate investing, just in general, but specifically when you're thinking about scaling and doing something larger, even if it's just from 1 deal a year to 3 deals a year to 5 to flipping. We go over a little bit of mindset. We go over a lot of things. Without further ado, guys, stop blabbing. We're going to jump right into the show. Michael Wagman, dude, I'm glad that I was actually able to get you out on the show. It's funny, we actually had a conversation, like 4 days ago, something like that. But we had previously connected on LinkedIn, So building that deeper connection there on the phone was like, obviously got to get this guy on the show. And so I sent you over the link and you scheduled it like 3, 4, 5 days later. It's like, perfect. We'll get you right on. No wasting time. So now that you're here, I'm excited for what we're going to talk about today. But obviously, before we get into any of that, Michael, tell us a little bit about yourself and what got you interested in real estate investing. But first, I actually see you there. For those of you that can't see this, he's sitting there with his guitar in hand, and basically it looks like he's about to jam. So y'all are in for a treat.
Thanks for letting me do that, man. Yeah.
Oh, you definitely have to turn the audio up. I heard that a little bit.
Oh, damn. All right. Well, yeah, hopefully that worked out okay. But thanks for having me. Stoked to be here.
So now that you have we've started the show out quite literally with a bang, then let's dive honestly straight into about yourself. That was what I had asked. I'm forgetting about what I was even going to ask you. So tell us a little bit more about yourself.
I just rocked your brain too hard. I apologize. I do this to people all the time. It's not your fault.
Wasn't fully expecting it. You know what I'm saying? So tell us a little about yourself, and then what even got you interested in real estate specifically, coming from a rock star background.
Yeah, well, a rock star background might be a bit of an exaggeration. To those viewers of yours who are watching the video, you can definitely see that I have quite a few guitars around me right now. Yeah, just, I always wanted to be a musician, not quite how things worked out. But when I started my real estate company, the first company I started was called Rockstar Properties, right? So I got to keep the dream alive in some capacity. I started in real estate in 2017. I had been watching too much HGTV, like maybe a lot of people do. And I thought I could flip a house better than they can. And, I just did it. I didn't know anything about real estate. 25 years old, just said, I'm not going to work for anyone else ever again. I'm going to do this. And I just kind of dove in feet first. And I made a lot of mistakes in the beginning. Thankfully, I never lost money. I didn't know anything about other people's money. So I was using all my own capital, one house at a time. It was a really slow start, but did single family over the course of 3 years. I was doing pretty much every sort of residential type of investing you can do. I got some duplexes and I rented those out. I bought a quad and I lived in one of the units, and I did house hacking, and I even did Airbnb with one of those units. I tried wholesaling. That wasn't for me. I tried being a realtor. That also was not for me. But eventually I started seeing the light of multifamily. That happened around 2020-ish time, which was a big shakeup in the world, as everyone knows. And it took a little while to get the first big multifamily deal, but that happened in early 2021. And since then, we've just been rocking and rolling.
I like that. Honestly, our backgrounds are fairly similar. I never tried the realtor thing, but there is a lot of things like the fourplex that used to having to house hack. It's just funny that I also was house hacking a fourplex as one of my first ventures. But what I really want to take out of that is that you realized after trying a little bit of everything that all of these different niches weren't necessarily for you. You wanted to do real estate. Again, you wanted to work for yourself, and you knew that. And so through that, you were bold enough to go out and take the steps to try all these different things, fail a couple of times, and eventually find what it was that you actually wanted to do, and then target that. I think a lot of people are scared even to get started because they think, well, what if I do the wrong thing in the beginning? What if I want to do real estate? What if I do this and I don't like it? Or what if I do this and if I lose money? That's probably the big thing on people's minds. I don't want to lose money. I don't want to waste my time here and doing this and doing that. How do I know what's right for me? And you can listen to all the podcasts and read all the books and do everything you want. But at the end of the day, if you're not out there actually trying and experimenting and getting the experience doing these different things, are you really even going to know what's right for you?
Absolutely. Yeah.
So I love that you did that. And I want to take that. And then you said in 2021, you started closing multifamily deals. So let's start from there. When you made that transition from that single family to multifamily space, what's kind of happened over the course of the last, what is it now, year and a half?
Yeah. So, well, it's been actually less than 12 months since we closed the first one. That was, I think, in May of 2021. But, if you want to count how long I've been trying to do multifamily, it took over a year to really get the first one to close, right? So kind of within the first 2 years of our business, when I say we, I have business partners, I have two main partners, and then there's a couple of KPs and sponsors that we work with on all our deals. But we have closed 5 deals so far, and we have 2 under contract. We're up to getting close to 500 units. I think it's like 460 something at the moment. And the portfolio value is about 50 million.
Dude, that's incredible. Where are you focusing at? What's like your target market?
Largely just the Southwest. So I'm based in Phoenix. My business partner's here in Phoenix as well. We're actually priced out of Phoenix. I mean, this market is really insanity. But as far as, we have New Mexico, Texas, and we have some raw land in Arizona that we're going to be developing as well. But it's actually cheaper to develop in Arizona than it is to buy a 1960s asset in Phoenix right now. So,
are you serious?
Yeah. You're talking sub 3% cap rates. It's insanity here. So hoping something changes soon. We'll see.
Wow. Oh yeah, we could spend an entire podcast just talking about what's going to happen soon, but we're not. We're going to focus on other things. And I wanted to then dive into the concept of doing larger deals. There's a lot of people out there probably listening to the show right now that have done a deal or 2 deals or a couple of deals in the single family space or the small multis, and they're really wanting to make that shift, make that jump to something larger. Or heck, maybe they've even been doing it for a decade, 20 years, and they're like, I just want to liquidate this and do something bigger. How do you do something bigger? Most people that get started, honestly, in the industry start in single family. There's like a select few people that actually immediately jump into multifamily. But I'm just curious from your perspective, do you believe it's honestly required to do small deals before you get into large deals? What's kind of your thought process behind that? How did you really make that shift? What does that look like?
Oh, absolutely. It's not required. Now, that being said, I think there is an element of confidence that just kind of happens over time once you've done a couple of deals under your belt, and maybe you got some single family here. I remember every time when I first bought my quad, that was like a whole mental shift that happened that kind of, gave me the confidence to keep going bigger. And I'm sure we could talk for quite a while about reasons I like multifamily over single family or residential for that matter. But yeah, there is kind of an element of perseverance and sticking with it. And, I would imagine that somebody who's never done a deal, the thought of going from 0 to buying a 100-unit apartment complex is probably, that's a pretty big mental hurdle. But do you have to do single family first? No, absolutely not.
Yeah. I started trying to wholesale, but we didn't ever close the deal. So could you say I was ever really a wholesaler? Probably not. And then we went straight into the fourplex, which is technically single family, but it's also technically multifamily. There's like this weird ground there with 2, 3, and 4 units because the government still quantifies it as a single family residence. You can still get FHA loans and different things like that. But obviously it's multi-dwelling. Anyways, I started out that, and then my very second deal after the fourplex was a 42 unit. So I went pretty quick, pretty fast.
There's that 10X rule right there, Mr. Cardone.
didn't really stick to the whole single family small side of things. But you talk about we could talk about the different benefits of multifamily versus single family, and I want to talk about it. Let's talk about it just a little bit, because basically what we're talking about today is accelerating your success. We're talking about it specifically through mentorship, but also through these larger deals, through these different avenues and niches. And just commercial in general, it's night and day different from single family. So from your perspective, what are just a few key differences and benefits for the multifamily commercial side versus the single family residential side?
So I love this question because I always like to tell this story about the last flip I ever did. So first of all, at that point, I had kind of already started seeing a little bit of decline in the profits per flip I did. And then I had this one particular case. I got it. The work took a little longer than I wanted it to, but we got it on market. We had a full price offer on day one. And the buyer had not been conditioned by their realtor, because obviously in residential space, there's a very low barrier to entry for realtors. Most of them don't know what the hell they're doing. And so the buyer wasn't conditioned on what kind of things were normal to expect on an inspection report. So, and inspectors, they like to get their money's worth, and they like to find every little thing. So this house had literally had every single surface touched. It was a perfect, immaculate house. And the buyer freaked out. They backed out of the offer. And what proceeded over the next 6 months was price reduction after price reduction after price reduction. And then some guy down the street sold his house for like 50 grand less. Well, guess what? Now my house is worth 50 grand less. So, that's the way that comps work in residential real estate. So I ended up looking at initially about 90 grand in profit, dwindled down to 30 by the time it actually got sold. And it took about 11 months start to finish. And it's like, man, 11 months to make 30 grand, you really might as well be working a day job. Right? Because you'll make more money. So, and obviously, with flipping, scale is important, but man, then just the nightmare of that experience was like, I don't want to deal with the kind of people, when somebody's going to buy a house, most of the time it is the largest purchase that they're ever thinking of making. There's a lot of emotions tied to that purchase. And these aren't professional people. These are just regular people. But when you're talking about multifamily, you're talking about business owners who are talking numbers. It's really the difference, like a sales term, B2C versus B2B. When you're doing business to business, you take that emotional piece out of it, and the operators know what to expect. They know how business is run, and everything just happens more efficiently. At least that's most of the time been the case when I'm talking multifamily.
Right. I've had a couple of cases where it does not feel like the sellers are all of that professional or really know what they're doing, especially if you're doing like mom and pops on the commercial side. You're buying from someone that only has one or two, or it's had it for the last 30 years, but never really managed it. Someone else managed it, or whatever the case is. They really don't know what's happening. And yeah, like you said, most of the time that's the case. But anywho, well, yeah, I think you're absolutely right. There's a lot. We could literally sit here and spend an hour just talking about all the variances and differences between multifamily and single family. But at the end of the day, what you want to do is what you want to do. You can honestly make probably just as much money in the single family space as you could the multifamily space. And a lot of people just look at multifamily and they think, well, everyone else is doing it. I'm going to make more money doing that. It's simpler, economies of scale, everything that we could talk about. But you could literally make the same, if not more money doing single family as opposed to multifamily. At the end of the day, it's what you really want to do. Which avenue do you want to take? Which niche do you like? And do you want to deal with emotional buyers? Do you want to deal with emotional sellers? Do you want to deal with the average, ordinary, everyday Joe who is struggling to even get approved for this loan? Or do you want to deal with the guy that's got $25 million in his bank account, is waiting to wire it for your deal?
I think you hit the nail on the head right there. Yep.
Okay, so now let's talk about the whole concept of the mindset shift that had to take place, because you said you did that fourplex and that shifted your mind a little bit to help you start doing larger and larger deals. What was it like going from a 4-unit to, say, a 50-unit or whatever that next size deal was for you?
Yeah.
How did you overcome that barrier? And how did you even know which direction to go? Because I think a lot of people are like, I'm ready to take that next leap. Where do I start?
Right. Well, so the thing that I did was I paid for a mentorship. I read a book. So, I think education is kind of the foundation of everything we do. And when it comes to real estate and really financial literacy in general in this country, there's nobody out there, nobody's going to teach it to you unless you take it upon yourself to learn it. Right. So I read a book, a pretty good book called Multifamily Millions by David Lindahl. I highly recommend the book. I signed up for a mentorship. Now, from an education perspective, do I think the mentorships are worth what they cost? I don't know. Not always. I think that you're still going to have to teach yourself a lot in that regard. But from a network and support perspective, I think they're worth every penny. I certainly wouldn't be where I am right now without the one that I did. I would have met my business partner without that. I wouldn't have met the sponsors who helped us get into our first deal without that. So that's where I really got started. And even just, there's a lot of mindset shifts that happen in the beginning of, starting to send out LOIs on a regular basis. Which markets do you want to look in? Because previously, probably everyone is looking in their backyard, right? But now the whole world opens up when it comes to commercial real estate, right? You could go buy a deal anywhere. You just find the right property manager in that market, and you can make it happen. So, yeah, there's a whole lot of mental shifting that happens along the way. I remember flying out to Tennessee for my first deal, which I didn't end up buying, but it was the first one that I actually flew out to and go look. And I'm, by myself driving to some tertiary market in the middle of the middle of nowhere, just off a highway in Tennessee. And obviously the broker looked at me and, he knew that I'd never done a deal before, and he kind of wrote me off. Right. But just getting that experience and actually, taking the massive action that it takes to sort of get on your journey into actually getting that first deal. There's a lot of things that need to happen.
That is so cool. So this deal, it came from this particular broker?
Yeah. And so and I'd been talking to one of his junior guys for a little while, right? But they had lined up all these showings. So I hopped on a plane and I flew out there by myself. And this was before I'd even met my business partner either. And I think that's another thing that happened in the beginning. Just kind of answer one of your earlier questions. I was really overwhelmed by, where do I look? I could buy a deal in the Carolinas. I could buy a deal in Tennessee. I could buy a deal in Florida. I could buy a deal in Idaho, And it's well, I met my business partner and he had already figured out some of the things that I hadn't. He had really strong local area knowledge in the Southwest. And, it just so happened that we were living in the same city, which was really helpful. But he already had property management relations. He had really strong local area knowledge of Phoenix, of just Arizona in general, New Mexico, Western Texas. So, that worked out really well for me in that regard. He was able to sort of fill a gap that I didn't know I needed at the time.
Okay. Tell us about the connection with that partner. It's a little bit of a tangent, but I'm just intrigued. How did you meet? You said you met him through the mentorship, and then how did the relationship evolve to eventually hey man, let's partner together?
Well, so I met him through a Facebook group that was through the mentorship, and he posted in the group because he had a specific need. He had a deal that he was in best and final on, and the person who was going to be a sponsor dropped out at the last minute, and he needed a sponsor quick. And so I just, we got on the phone, we talked for a while, we really gelled, but I hooked him up with the guy that I knew who was going to be my sponsor actually on the Tennessee deal. And ultimately he didn't end up winning that deal, but we just kept talking. And ultimately it was okay, we're going to do a deal together. And so the first deal that we actually did was together with that same sponsor. And it took a little while, but that's how it happened.
I love that. It's fairly a similar story with myself in terms of the partnership started when a deal was there. I feel a lot of times it's when the rubber hits the road that you're oh shoot, I need to find a partner. I need to find someone I can do this with, because there's no way I'm going to be able to do this by myself. And I've been looking, you'd probably been looking for a partner anyway. And so the deal came about, and now all of a sudden he's looking for someone. And for me, I had finally found a deal that I felt penciled out. And so I reached out to this guy that I had previous conversations with, and he was like, sure, let's do it. And like your story, of course, the deal we didn't end up closing it, but that was the beginning. That was all it took. That beginning of reaching out, getting out of your comfort zone. And then now you closed $50 million in real estate because you took that leap of faith, got out of your comfort zone and flew all the way to Tennessee and reached out to this guy on Facebook. You were active, present. That's awesome.
Yeah. And, the other thing I will say is that in the mentorship and often in just real estate in general, people who are trying to learn how to do it, you get told that you can do everything by yourself, that, you can do the broker relations, you can do the investor relations, you can do the underwriting, you can do the asset management. And the truth is that multifamily really is a team sport, and in a lot of ways, having my business partner complements and allows me to do what I want to do, because he's really good at the broker relations and the underwriting and those sort of things. And I like raising money and talking to people and networking and going to conferences, and, it balances itself out in that way.
Let's talk about that mentorship, because there's probably I mean, obviously everyone here, we're specifically talking about accelerating your success through mentorship. So they want to know, how did you even go about finding this program? It sounds like you read the book and so you found it from there. But then in terms of choosing, because obviously some mentorship programs are more expensive than others. You're not sure if you're going to get more hands-on time with the person in terms of education, if that's really what you're targeting, or if the network's going to be better over here because they charge more, or if really the network's going to be just as good, if not better over here because they charge less. How do you go about actually like picking a program?
That's a great question. So there are a lot of good ones out there, and there's a lot of good books out there, and there's probably also some less good mentorships out there as well. I ended up going with the first one, with the first book I read. I didn't really know about any of the other big guys in the space at the time. So maybe I could have saved a little money in that regard, but obviously looking back, I wouldn't change anything for the world. Now, there are mastermind groups that you can join, which are a little cheaper, but they're not as necessarily comprehensive. I would say my advice in that regard would be, read 3 or 4 of the books. There's Joe Fairless, there's Rod Cleef, there's Michael Blank, there's all the guys out there. There's Dave Lindahl. Read the books, and whichever one you like the most, follow with that guy. But at the end of the day, I think the true value is in the networking. And when it comes to the education piece of it, a lot of it is just going to be spending time and immersing yourself in the space and just doing the basic action items you need to do. You need to underwrite a lot of deals. You need to call a lot of brokers. You need to just have those conversations. You need to go out and fly and look at deals. And it's going to be, I think the average for people, and I can speak from my mentorship, I don't know about all of them, but I think the average is about a year before people actually do the first deal. So
see, that's incredible, because that is the acceleration that we're talking about. Literally, you think about it, a year, it seems like it's a long time, but honestly, in the grand scheme of things, it's not that long to close your first large multifamily deal. I'm just trying to think about it, because I never actually did a mentorship program, right? When I started my journey, I was negative $60,000 in the hole from the fourplex that ended up being just an overall bad investment. But that was basically my mentorship. That was my education, my school of hard knocks. And I used that to pivot the direction that I wanted to go in. And then from there, it probably took me a little over 2 years actually to close my first deal. And that was without a mentor. So if you really just grit and grind, it still maybe doesn't take necessarily as long, but you can accelerate that timeline if you already have the money. And if you're really looking to find amazing partnerships, like you said, you spent the money and you wouldn't change it for the world because you found that partner. Like there's no telling where you'd be now had you not spent the money and not found that particular individual.
I will say that with all of these mentorships, there is a certain portion of the population who will sign up, pay the money, and probably never get out of the LOI phase. But I'm the kind of person where like I paid 40 grand for mine, right? Like if I'm putting up 40 grand, there is no way in hell I am not going to come out on the other side of that winning. Right. And that was kind of my mentality going into it. And obviously on the first acquisition fee, I made back the cost of the mentorship. So,
right. That's exactly what these coaches, mentors, dudes, whoever, that's what they're trying to incentivize by charging the amount of money. Obviously, yes, they're trying to make a profit as well. But I think a big reason to charge any amount of money and for it to be a decent amount is like, hey, you're going to spend this money. This is not only an investment in your education, but this is going to be an investment in you. This is going to be an investment in your growth, your future financial situation. And then they're going to try everything in their power to get you to where you need to be. But like you said, there's a lot of people that never exit the LOI phase. You have to actually take the effort to do so. And they feel like if they charge a certain amount of money, it's going to incentivize more of the group to actually get out there and do something about it.
Yeah, it's possible. And it's like, that Warren Buffett quote or whatever it is, the best investment is always going to be in yourself, right? I think they use that quote when they're trying to sell you the mentorship too, but right. It's true. You're never going to regret spending money on your own education. So
boom. All right, Michael, tell us more about your current portfolio and kind of what you're doing now. So you went through the mentorship program, you found the partners, you got $50 million of assets under management tell us a little bit about some of the deals that you bought, and then what's your role in the business is right now?
Yeah. So we had the first deal was a 60 unit property in New Mexico. I think the thing that was unique about that one is we didn't bring in anyone else for the capital raisers. So just me and my two partners and then the one sponsor, but the sponsor didn't raise any funds. So just the three of us and our main group were able to pull together about $2 million for that first raise. And I think that was pretty confidence inspiring too. That definitely was like, holy crap, we did it. And there's absolutely something that also happens once you close the first deal where it's like, this is no longer something that I talk about doing. This is something that I've done and I do. And that really is a big deal. Then the next two deals were actually not multifamily value add. One was the raw land deal, and then the other one was a commercial redevelopment of like retail spaces. So we're doing development and redevelopment in a town called Casa Grande, Arizona. Very excited about that. Then we got a 145 unit in Dallas and a 203 unit in San Antonio. We have two more under contract right now. One's a 20 unit, one's a 30 unit. Ideally, as far as our buy box is concerned, we don't always want to be pursuing these smaller deals, but man, when they pencil good, they pencil good. So, there is a lot of benefits that come with the scale of having a property large enough to have its own leasing office. 100 plus units usually is kind of the sweet spot there, but hey, it works good. And our property management company is already in those markets. So we're picking up these little guys too.
Boom. Now, those larger deals you guys are doing in Texas, are you partnering with other GPs to do that, or you guys are crushing it and doing it just the three of you?
So the 203 we did, yeah. And then the 145, somebody else got it under contract, and then we came in and raised capital for that deal.
I love it. See, it goes back to the whole concept of it's all about you, the people that you know, your network, the team, the partners. And you guys were able to pool what you were great at to help them out. And tell us about what it is that you actually do now in your business.
Yeah. So like I briefly mentioned this before, but my partner does a lot of the things that I don't like to do. Underwriting. I can underwrite. I just don't want to. Right. So I mostly spend all my time and effort focusing on raising capital. And at the moment, my real goal this year is to absolutely just blow up my marketing presence. So whether that's through social media, whether that's through going on lots of podcasts like this, maybe even SEO, but I'm trying to just really focus on the capital raising side of the business and get myself in front of as many investors as possible. That's pretty much my goal this year.
Boom. Okay. Tell us I don't want to say what the main differentiating factor is, but tell us like what you guys say vivid vision is, what your plan is, and what you feel like you do just a little bit differently than most sponsors.
Yeah. Well, so I think the first thing is that we're not afraid to try different things. Like I said, with the land development, with the redevelopment of a retail property, with the smaller units and with the larger units, we're really kind of, the name of the company is Nimble Capital Group. And I think it's aptly named because we're nimble in the sense that we're, willing to look at these different kind of asset classes. We've also looked at some industrial properties. There's a bunch of different things that we're interested in order to continue driving returns for our investors. So,
and I think that's important. The whole concept of the pivot, which is what you had kind of mastered early on when you were failing at these different things and trying them and realizing that they weren't really what you wanted to do. And then you found what you did wanted to do. You were pivoting. And granted, you're doing what you want to do now, but you're realizing as the market's shifting a little bit, like you said, the smaller deal, it pencils out. Well, let's do it. It's not really what we're targeting, but it came across our desk. It makes a lot of sense. We already have the systems and processes in place and the teams. Why not? Why not execute on that and diversify a little bit?
Yeah. And for some of these 20 unit deals, I said we have 2 under contract. We're actually about to get 2 more, another 30 and another 20 under contract pretty soon here. And so, the total ends up being high, and they're all in very, close proximity. So it's kind of like getting one bigger one, but it's not. But, some of these deals, would you be looking at syndicating $2 million on a bigger deal? Well, with $400K, we can just joint venture this and get it closed right away. That's pretty appealing as well. Just nab it up.
Right. Because then with the joint venture, you and your partners are owning 100% of the equity.
Correct. And we can determine whatever exit strategy we want at whatever time we want to. That's one thing I will say about syndication is that you have the fiduciary responsibility to your investors to exit within a certain period of time. And most investors don't always like it when you hold on to their money longer than 5 years, or at least that's their perception. The truth is, the longer you hang on to the property, the better the returns keep getting. But people want their money back typically. Whereas if you joint venture, you can just hang on to these things and let them keep cash flowing forever. That's pretty appealing, at least to me.
Right. Once you get to that point from the syndication cash flow and acquisition fees and different things that come your way, and you got more cash in hand and systems in place, you start doing these smaller deals, joint venture, and then the cash flow goes from, the whatever you were making over here on the syndication from the 3% of the deal that you got to now you've got 33% of the deal joint venturing. It's night and day different. Absolutely. Just another way to invest in multifamily or invest in real estate. One reason I started the show, one thing I love about real estate, infinite amount of ways to invest, to create wealth, preserve it. I mean, it's incredible. I learn something new every day. All right, Michael, where is Nimble Capital Group headed in the future?
That's a really good question. I think that the reason that me and my partners are doing this, we don't want to get so huge that we would have to vertically integrate, start our own property management company, talking 4, 5, 6,000 units. I think there's going to be a certain point where we get, maybe 12, 1,500 units, and then just start going full cycle on these things and, get to be really picky and choosy with the deals that we do and don't want to do. But somewhere along that way, I think we'll definitely say enough is enough. And then, the value of time freedom and what we want to do with our lives is there.
Okay. And I think you had mentioned that eventually you want to go be a completely passive investor, right?
I do. Yeah. I have a goal. My personal goal is to make $1 million a year passive. And, let's say 10 million invested, but a 10% return. There's a straightforward path to getting there. It'll take some time, but even if I do half of that, more money that I could ever spend.
Right. 100%. And so when you go full-time as an LP, what's going to happen to everything on the GP side? Are you going to give your role to someone else that you'll have hired internally? Or do you think at that point, all of the GP deals may have been kind of eliminated and you'll just be fully passive on it?
Full cycle to eventually, knowing enough people in this business, knowing the kind of people I could trust. I mean, there are funds right now that you could invest money in and they'll pay you just a straight 10 pref, right? And so maybe that's something I would be interested in. But, I think there are a lot of operators out there right now. I see some of this stuff on LinkedIn right now. People that, I know have been in the business for a long time, promising returns that I just really don't understand, and there are people getting into deals right now that are, it worries me a little bit. So, we're extremely conservative in our underwriting and we always, hedge our bets against the market. And we have our minimum criterias and I see some things sometimes where people are promising a 2x return in 3 years right now and a 9% cash on cash. And I'm like, nobody is doing that in today's market. Absolutely nobody is doing today's market, right? I mean, you can make that kind of return if you, assume that the cap rate on exit is the same as the cap rate on entrance, but nobody should responsibly do that, right? So my point in saying all that is at some point, I'm going to know the kind of operators who I really, really trust. And I want to just give them all my money.
Well, you heard it here first, folks. Try to become a great operator because Michael will give you all his money. Now you know a passive investor. Okay, let's transition into the next segment of the show called the Pod Decks segment. Now, this is without a doubt my favorite segment of the show, and I'm going to tell you why. If you've never listened to the show before, basically what Pod Decks is it is a company. It's a company that makes decks of cards. They make all different kinds of decks of cards. I couldn't even imagine or fathom how many different decks they have with different topics and genres and discussionary things that they have. This one, however, is just a random deck called the interview deck. And on the back of each card is a question. totally and utterly random. Has nothing to do with anything, nothing to do with what we're talking about today. So this is going to be pick a card, any card. You're going to pick two, and whatever the heck is on the back of that card, that's your question for today.
All right. Sounds good.
All right. So you tell me when to stop.
Stop. Stop. I don't know.
We may even do a bonus question, and I may pick the card on the top, and you might get a third question here. Okay. First question. Are you ready?
I'm ready.
What is the absolute worst dream you've ever had?
Oh, this happened 3 nights ago.
No way.
Yeah. I don't remember my dreams very often, but I was in a plane crash in my dream. Yeah, that was scary.
Oh my! I need some details. What happened?
I mean, like going down in white light and everything, and I thought I didn't wake up immediately either. I was just surrounded by white after it happened, and I was like, "This is insanity." I was like, I don't remember taking any acid before I went to bed. So yeah, I woke up. I was very glad when I woke up the next day, but yeah, that was a crazy dream.
That's crazy. Like, I am cognizant while dead. What is happening? Yeah, where am I? Yeah. I can't believe that happened to you like 3 days ago. What are the odds? All right. Next question. What is a secret talent that you have that no one else knows about?
Oh, okay. This is like a superpower of mine.
Oh, man.
It's not, it's going to be very anticlimactic. When I am hanging up my t-shirts, I always grab the correct number of hangers without knowing how many t-shirts I hang up. I just grab some hangers randomly, and it's the correct number every single time. And I amaze myself on a weekly basis. I swear to God.
I think you need to film that. I think we need to see you have like a random pile of shirts. So we know you didn't like count the shirts, and then grab them, go grab some hangers, throw them down, hang them up. Dude, you could get
too. I put away my laundry this morning. It happens.
Dude, you could get 1 billion views on that, and then YouTube will start paying you. And then you'll get to that passive income number. All right, bonus question. I'm picking the top one off the top of the deck here. What eats up most of your time that you'd like to change? Ooh, it's a good one.
Okay, I will just keeping the house clean. It's I could probably hire somebody to help me. That's how all businesses work. You hire back, you pay money, and you get your time back, right? But yeah, man, just vacuuming and dishes and laundry, man, all those things. It's a lot of time.
100%. I've always said once I get to the point that becomes financially feasible, I'm most definitely hiring someone, because I don't want to worry about it. I don't want my wife to have to worry about it, because then if she's doing it, then I'm basically having to do it as well, because if she always does it and I never help out, then she's going to be angry at me. So we just pay someone that we can eliminate all the headache and
all that headache just gone.
Just gone. All right, now transitioning to the last segment of the show called the Core Four. Same 4 questions we ask every guest. First question is, what is your favorite business related book?
Do you mean not real estate business? Because I mostly just read real estate.
No, absolutely. It can be real estate. The question used to be, what is your favorite real estate related book? But every time I asked the question, someone would say, well, this isn't really real estate related, but it's business or mindset or this, that, or the other. So I changed the question.
Exact opposite of that person and say, I only read real estate books. That's not true. But I would say my favorite is probably Hunter Thompson's book, Raising Capital for Real Estate. I mean, in specifically in regard to what I do, that book, it's like a blueprint.
I know. I love the books that are so clear cut. It's almost like step by step, exactly what you need to do. You literally just it's like getting into the mind of a millionaire, or even billionaire, depending on who wrote the book, for $20. And then you just repeat their process and you could eventually be where they are.
Yeah.
I like that book. That was a good one. Question number 2, what do you think your unique skill is that helps you become successful?
I think basically just decisiveness and action taking. I mean, those are kind of generic responses, but when I was 25, I said, I am never going to work for anyone else ever again. And I bought a house without knowing anything about how to buy houses. I just had a little pile of money from my previous job and I just went for it. And, just taking that first step, just build some momentum.
Right. Eliminating that analysis paralysis. It sounded like you didn't even have. There was a little bit of analysis, but then you're like, let's just do this thing. Because that's how I've always been. I think that's probably what ended up screwing me with the fourplex. But regardless, it took me to where I am today, so wouldn't change it. Third question, tell me something that's true about real estate that almost nobody agrees with you on.
All right. So we've actually talked about this a couple times now on this episode, but I think that a lot of people in real estate say, just pick one thing and be really good at that one thing. But I think you're not going to know what that one thing is unless you try a bunch of other things, right? So don't be afraid to dip your toes in all the waters.
Right. And there are a lot of people that say diversify. They say, oh, you need to be really good at one thing, but then they tell you to diversify. It's like, well, how am I going to diversify if I'm only doing one specific thing? And they say, well, invest passively with others. Well, then that's not just doing one thing. So yeah, I think you're right. Last question. What one piece of advice would you give to our listeners wanting to succeed in real estate investing?
I would say just start and then persevere, right? Real estate takes a lot of time. I think even when I bought my rentals, it wasn't until probably 2 or 3 years of ownership that I really started to feel the profit from them, right? So it just takes some patience, perseverance, and just some action taken in the beginning. Just do it.
You're absolutely right. Yeah, it definitely takes some time before you start.
Yeah.
Sometimes I always say that I'm equity rich and cash broke, which I feel like is not an anomaly in the real estate realm. More often than not, real estate investors.
It's very normal. And in that regard, I have started leaving all of my acquisition fees in the deals because I want that passive income, right? And the AC fee is how the syndicators pay themselves for the time and the work they've done. But, I would rather start stacking up LP money in all my deals too. So I want that cash flow, man. I want it.
Boom. Michael, if anybody wants to learn more about you and your business, how can people get in touch with you?
Well, like we mentioned before, I am very active on LinkedIn. You can find me on there. I have just rejoined the social medias. I have been largely social media averse for the last few years of my life, but I have an Instagram now where I post little videos of myself playing guitar and doing real estate things. You can find me at rockstar_investing.
Rockstar_investing. I can dig it, man. Well, dude, I thoroughly appreciate you coming out here, spending some time with us, roughly about an hour now, to tell us about your journey through real estate, how exactly you accelerated your success, specifically through mentorship, and all the other gold nuggets in between we've talked about today. Thank you very much.
All right, man. Thanks for having me on. I had a blast.
I thoroughly enjoyed today's episode. I'm so glad we were able to get Michael out on the show with us today. If you guys enjoyed it, feel free to follow him on the different social media platforms that he uses. I know he's primarily on LinkedIn, but he talked about how he had just started his Instagram page. Feel free to go follow him, potentially go check out his deals, see if he's doing any active opportunities at the time. I'm not sure if I'm pretty sure he primarily does 506B. So you'll have to create a little bit of a relationship with him before you get access to those. But feel free to reach out to him. Obviously, awesome guy. And that is basically all I have. Guys, before we go, if you're not already subscribed to the show, please go ahead and subscribe. What are you waiting for? You're going to miss out on the great education, information, laughs. I mean, the pod deck segment's hilarious every time. The fact that he had a bad, crazy dream just 3 days ago, and that just so happened to be a question that came up. I mean, what are the odds? So feel free to subscribe. And then if you enjoy the show, leave us a rating and review. It helps not only myself know what I'm doing right or what I'm doing wrong and how I can tweak and make the show better, but it also helps grow the show. It helps other people find out about it so that others can continue to grow their wealth and continue to learn about all these different things that we've discussed over the last 150 some odd episodes that we've released up until this point. With that, guys, this is Josh Ferrari signing off.